Nice to meet you, Mike.
Nice to meet you as well. I'm just figuring out GoToWebinar over here, minimizing some stuff, bringing up some other stuff. And
Okay.
yeah, so can you see the screen okay? And
Yeah, we have the S&P here right in front of us, and I want to thank you again for taking time out of the trading day to edify our community. And I know that you're mainly a individual equity trader, maybe some ETFs. I've been to your website. I'd like to ask my guests how they got into the trading industry, how long ago, who influenced them. Basically, who do you blame for getting the trading bug?
who do I blame for getting the trading bug? Well, I think I would need to blame my Uncle Francis.
Okay,
Back when
there's always someone.
What was that?
There's always someone.
Yeah, definitely. I think I would blame him. Back when I was probably about 10 years old, he was telling me about this stock that he had found, or this company that he found after reading the Wall Street Journal, and it allowed electronic devices to talk to one another without the use of wires. And of course, he was talking about Bluetooth at the time. And
wow.
It was just fascinating. That was, geez, 20 years ago. So I would have been in my, probably around 10, 12 years old at the time. So
okay,
probably more like 25 years ago.
Okay, so that got your interest. You started looking at grabbing your dad's or uncle's Wall Street Journal, and you started looking around, or you said, wow, you know, you can really make a lot of money if you find the right company, right?
Well, that planted the seed. And my path was that I actually didn't have any money to invest until I finally graduated high school, and I started to work part-time while I was earning my degree. And I had saved up a bit of money. I had about $5,000 at the time, and I had no idea how to go about investing in stocks. So I just went to my local bank where I had my savings account, and I walked in, and they happened to have a little area where you could talk to a manager or what I thought would be a manager to talk about start trading stocks. So I spoke to somebody and he said, I want to start buying some individual stocks. And they said, whoa, you don't want to do that. That's way too risky. Well, what you want is this. And he pulls out his several different pieces of material that were basically a basket of mutual funds, and he started to show them to me. And so I was looking through these various prospectuses, and he was telling me, well, what are you doing? Nobody looks at those. And so I just very quickly was like, okay. I flipped through it a little faster and said, I'll take this one, and this one. And they were basically a basket of different stocks. So the mid-cap stocks, small cap stocks, and then a bond fund. And I thought that I was being
conservative.
That I was being very wise. That I was letting a professional manager manage it for me. I was very well diversified. Each of these things had about 200 different varieties of stocks and bonds in them, and I was doing very well. This was in 98, 99.
Okay.
And, yeah. 6 months go by.
And I'll bet you this, that he didn't say what the load was on each of those.
Oh, no, I don't remember anything about any of that. It was the conversation was about diversification, that you can't do it because the market is just too hard, too complicated. Here's my product that can help you.
Right. That was his inventory. So you don't want to do this. We have this in inventory. I bet the loads were like 3%, 4% back then, Michael.
Oh, I'm sure they were, and I had no idea what a load was.
Yeah.
So
you're that manager at the bank did.
I bet he did.
Yeah.
And so, of course, after 6 months, it was up. I think I was up maybe about like 5-6% relatively quickly, and I thought, wow, this is great. And then like after a year, it was up maybe about 10%, and I thought that, wow, I'm a genius for doing this. And so then my
All right.
studies started to
Then 2000 came.
what was that?
Then the year 2000 came.
Right, but the year 2000 came, I had no idea what was going on because I started to get so involved in my studies that I just thought, well, this professional manager has it, like I don't need to really worry about it. And I didn't look at it again until I was just about ready to graduate in 2002. And at that time, I thought that my initial investment would have ballooned into something like 10,000 at the time, at the rate that it was going. And the last time that I had actually checked, it was sitting at around 8,000. So I thought that, okay, I should have a halfway decent amount to put a money on a down payment on a car. It'll be great. And I checked my statement and it's not at 10,000. It's not at the 8,000 that I had sought out previously. It wasn't even at the 5,000 that I had started with. It went all the way down to 4, and I was in shock. Here I thought that I had professional managers managing it for me. I was diversified. What in the heck happened to my money? And so I just pulled it out and I went home and I cried, and that was the end of my trading journey for a while.
You know what, Michael? That experience that you had, millions did, and they had a repeat performance of it in 2008. Therefore, we had a boom in self-directed trading. People finally decided that these salesmen that held themselves out as investment counselors, who really knew nothing about trading or anything else, that if anyone was going to lose their money, it was going to be them. And that's why we had a huge boom in self-directed trading. So, okay, so you made this realization and you became one of those guys that said, well, you know, the manager at the bank really wasn't that professional. I'm going to learn how to do this. Who influenced you? I see your setup, you use candlesticks. What did you do next? Did you take courses? Did you yourself have a mentor?
I ended up having mentors kind of sort of along the way, now that I look back on it, and then like as my trading progressed. So fast forward to maybe about 10 years ago at this point, and I had started a new job, which I'm still currently in. I'm a fund manager. Nothing to do with stocks, though. It has more to do with managing grants, philanthropy, that sort of thing. And a coworker told me that, hey, you should probably start to look into managing your own money and looking into stocks and everything. And I told him my sob story, and he recommended a few different books for me to read. And one of them was How to Make Money in Stocks by William O'Neill.
Okay, and, yeah, Investors Business Daily. Okay.
Yep, founder of Investors Business Daily. And I read that book, and it made terrific sense to me that historically what the biggest winners in history have seen have all had certain common denominations to one degree or another, and they all sort of revolved around earnings and sales and something new about the company, being a leader in its industry. And most stocks, or like the vast majority of stocks in the market, are not going to meet every single criteria of this quote unquote ideal growth stock. But if you could check off enough of the boxes, it would give you a higher probability of finding something that could potentially run 200, 500, 1,000%.
So, yeah, he also popularized having a relative strength ranking, which means you buy the strongest stocks when they're pulling back, and you liquidate the weak ones when they're rising, or short them. So that's still a very important thing for trade selection. Relative strength rankings, aren't they still for you?
Yes, absolutely. When I'm looking for different stocks to trade, one of my criteria is the relative strength. And if a stock is outperforming the market and outperforming its peers, then that's something that I'm going to investigate and gravitate toward.
Okay. All right. So it's interesting that you have another job and you're managing funds for a philanthropic organization. Is it just moving money from cash to other things, or it's completely unrelated to what you're doing with your subscription model, right? You don't manage money. Go ahead.
It's completely unrelated, although I would be remiss if I said that there were no transferable skills. One of the things that I do on a day-to-day basis, I use Excel quite a bit, so I'm very proficient at using spreadsheets, generating pivot tables, and things of that sort. That's come in very handy with market analysis because it allows me to do a lot of the heavy lifting very quickly. And so one of the things that allows me to trade efficiently is being able to do that and be able to do all this part-time. And that's really what birthed the idea of chartyourtrade.com, because as I started to learn and I started to get involved in these other groups. So one of the things that Investors Business Daily offers is meetups where people could go and discuss the ideas around the CanSlim trading methodology with one another. And so I went to the one where I am in New York City. And I was in that group for about a year, learned a lot from those guys. And then I started to show them what I was doing and what I had learned and how I was starting to apply things and make it efficient. And they were pretty impressed with what I was doing as a part-timer. And many of them wanted to adopt what I had started to do. And so I thought that if I was able to impress people with decades of experience, and some of them that were doing this professionally with what I was doing as, just some kid that was interested in the market, then I thought that, man, maybe I have something that's worthy of sharing on a much grander scale. And that's how Chart Your Trade was born, and Chart Your Trade was born a little over 5 years ago at this point.
Okay, so very interesting. I coach and mentor people that, it's a very rare breed of people that can just support themselves through their trading, and that even some of the biggest traders like Richard Dennis in Chicago had a clearing firm and another revenue source. So do you think that you could support yourself just on your trading without your other job? And does having another job take the pressure off you so that each trade is not life or death for you?
Oh, absolutely. I'm not my trading by itself wouldn't be able to support my household yet. I'm not sure if at some point in the future, I imagine that the accounts would grow large enough to where they could. Would I necessarily want them to? That's a question for future Mike to answer. But right now, I would imagine that it would add quite a bit of pressure, and to not have to worry about that this is going to pay for the mortgage, or that it's going to pay to put my daughter through school. It allows me to be a lot more objective, to not have that additional burden.
Okay, yeah, okay, very good point. And you probably designed this. I read a little bit on your website before we get to maybe a few comments on the market. You did believe that low that we had in February would hold. I read a little piece, nice call. Did you design this website for people that Also, this is an avocation for them rather than a full-time vocation, because that's where you come from. And, you know, mobile apps, I don't know if you have one, but it's much easier for people to have a job and trade because of mobile apps, because let's face it, if you're working for someone and you're pulling up trading websites on your workstation at work, your employer most likely wouldn't be very happy about it that you're spending time observing the market and trading, but you have your phone there with a phone app, and you could always just, you know, get in, get out, and, you know, continue to do your work. So phone apps has also made it much easier for people to be self-directed. And someone gave me a statistic, I think it was Greg Horvat, of his subscribers, I believe 80% or more also have a full-time job. Is that what you've discovered?
Well, the way that I trade is to do the bulk of my my work on at night and over the weekend, and then like similar to how Nicholas Darvis would do his work. He's one of my trading heroes because he was somebody else that was able to trade part-time, not pay attention to what the market's doing during the day, and be extraordinarily successful with it. And that's before we had computers and being able to trade from your phone and everything.
Right.
So I think that people of today have it really easy compared to how it was way back when. And
maybe you know, maybe people are too close to the market now, and it's actually an advantage. I know that we're short term here in our currency trading, but I tell people that it's better once you have a position on to manage the position from a longer time frame, so the noise doesn't jiggle you out of what you were thinking about originally. So maybe being more detached is actually an advantage than, you know, watching every tick. It doesn't change your destiny anyway, does it?
Well, I think that for me, I would definitely agree with that statement, but I think that it really depends on the individual. What works well for me might not work for well for you, and I think that self-awareness is one of the most important and underrated qualities that anyone can really have. And it takes a long time to really discover what's going to work well for you as an individual.
Yeah, you just echoed what Jack Schwager told me, author of Market Wizards. I asked him what's the most important advice you could give a trader, and he said find a trading style that suits your personality. And that's a process too. You know, some people may start off thinking they want to be day traders, and after a few months they realize, you know, they want to be swing or position traders, or vice versa, after they discover how their emotions work when money's on the line. So, you know, Michael, we've had a two-way market since that little mini panic in February. Has this made the markets more enjoyable for you to trade instead of a one-way street that we had going into that time frame? That markets are a little bit more binary?
Well, for my trading style, the way that I am trading now, and this is something that helped me dramatically, is separating my accounts out by time frame. So here's what I mean. I'm somebody that likes to look at multiple different things, and I used to have everything just in one account, and so I would trade something on a shorter time frame, and I would end up getting distracted by something on a slightly longer time frame, so intermediate to longer term, and then I would end up getting confused and end up selling one position that was kind of okay but wasn't doing anything wrong to go for the shiny new thing, and that would screw me up. So what I do now is I have 3 separate accounts, one for short-term swing trading, one for intermediate term, and another one for long-term retirement. And so keeping them separated in that regard was able to get me out of most of my positions into cash right around this neighborhood in my swing term account and started to back out a little bit in my intermediate term account. And the long-term trading account, let me just pull up a monthly chart, didn't bat an eye because we're still holding above this 12 or what's a 10-month moving average on this chart. Let me just adjust that. So 12-month. And so long as we are above the 12-month moving average in my retirement account, I'm still holding, because the retirement accounts are just the basket of mutual funds that I get from my employer.
Why did you choose 12 and 40?
On this chart, well,
I mean, if for the moving averages that are important guidelines for you, I mean, people use all different types of time frames. Why 12 and why 40?
Well, 40 just happens to be on here. It's really the 12-month that I'm looking at on this particular chart, and the reason why is because if we stay above the 12-month moving average, and the bulk of the mutual funds are pretty much following the path of the S&P 500 to one degree or another, the ones that I'm holding, I would exit on a close below the 12-month moving average, and I would either enter or stay in on a close above. So I'm only looking at my retirement accounts at the end of the month to see, well, what's it doing and is there some kind of a signal to do? So when this move happened, that was scary for many people, but it went down, touched that 12-month, and within a couple of days, it had bounced it and rallied off of it. So still nothing to do. Back here is where you end up getting chopped up a little bit. So you end up exiting down here, and then you're back in and you're getting chopped around. But the benefit of it is that you end up missing this, and you end up missing all of this down here. And so for that part of it, you end up outperforming. Okay.
So do you do any sector work? Are there any sectors that you favor after, you still have buy signals going? Since you do follow relative strength, what are the leading groups or stocks right now? And what are the laggards? And we'll wrap it up with that. What are you seeing?
All right. So
So breadth is also going to be an important measurement for you. I see new highs, new lows. You still with me?
For it runs 8 different scans and it has over 65 different criteria within these scans, and I could give a link to the criteria later on, but it's running these different scans, and then it overlays this ideal growth stock screen, and it populates results every single week, and you could adjust by what percentage you want all these stocks to pass this ideal growth stock screen. But what it also does is I'm sorry?
Yeah, it's a nice tool.
Yeah. Oh, yeah. Like this would take me several hours, or at least a few hours on a weekend to scan and then overlay a checklist. And to be able to just click a button and get it done is such a time saver. But the other part of this is clicking on reports and then comparing this week's results to the prior week's results, and then seeing is there expansion or contraction in a particular industry group. And so that's something that has pointed me towards pockets of strength within individual industries and helped me start to avoid or at least investigate other industries that are quickly taking a dive. Like this, for example, regional banks, last week was the 12 stocks had passed. This week, only 6 stocks had passed. So, okay, I would go and investigate the 6 stocks that are passing and see what's going on within that group. I would also look at others that are starting to move higher, like the airlines, like oil and gas.
Okay.
And so those are things. That's just one criteria of things that I'm looking for.
I also read you're a big fan of TradingView, that it's made your life easier. I use it. What do you love about TradingView? We'll do a commercial with them.
Well, this indicator here is one that's pretty useful. So somebody else created this new high versus new low indicator versus the NYSE, and I thought that this was fantastic to overlay on the S&P. I also like to look at the new highs versus new lows on the NASDAQ. So like I create my own charts for that just to see. And what I've noticed with that is that as the number of new highs expand and the number of new lows contracted, it typically precedes a move in the market by a couple of days. Wow. So it gives you a little bit of a heads up. And so you kind of see that rapid dry up here, right? Just before we took that nosedive. So that was curious, especially after you had such a large succession of new high, new high, new high. Aside from the technical analysis, that if you drew this and you see that it's breaking down below that and it's just really getting way ahead of itself, the rapid dry up in the number of new highs and the expansion of new lows preceded that move by a few days.
Nice market tell. So what's the best way, Michael, for people that have heard you live and will see the video to reach you, follow you? Your Twitter handle is what again? It's not your full name.
The Twitter handle is Michael G. Lamothe.
That's right.
At let's see. Yeah, there you are.
Okay, Michael G. Lamothe. I see that on Twitter. And your website?
Michael G. Lamothe, and my website is chartyourtrade.com. Let's pull that up.
Okay.
And that's really the best way to find me. I'm here. I'm on YouTube, Instagram, Facebook, trying to be all over the place. And yeah, on YouTube, I am doing 3 videos a week on a variety of topics. Some of the more recent ones have been sharing the path that I've been on to that allowed me to triple the return of the S&P 500 last year. And I've been going through that trade for trade and showing people that it definitely was not a straight path higher. There were drawdowns, there were periods where there were several losses in a row. There was some very frustrating trades along the way. And there were also a series of very big winners that we were able to hold on to. Things like Adobe that we bought January of 2017 and that we're still holding today.
Wow. You know, Michael, it's been a great interview, and especially your last point, you know, anyone could be great when things are going well. I've always believed the difference between a pro and amateur is how I've always believed that the difference between pros and amateurs is how they manage their emotions and psychology during a drawdown. So you just talked about it. Everyone goes through it. What's been your worst drawdown?
Oh, I'm sorry. I lost the audio for a second.
Okay.
You said what was the worst drawdown?
Yeah. What was it?
We ended up losing about I'd say 7% in the portfolio last year.
Okay. All right. So what you didn't hear me, but anyone could be great when it's all green. Pros know how to manage their psychology and emotions during a drawdown. So why don't you wrap it with this? While you were going through some adverse times in the market, what kind of self-talk did you give yourself to get through it?
What kind of self-talk did I give myself to get through some of those drawdowns? Well, it's sort of an evolutionary process. So Mike, from a couple of years ago, would have been second guessing a lot of the actions that were being taken. Mike today understands that it's all part of the process, and part of the way that I've been able to grapple with that a lot better is through daily meditation. So I meditate for about 15 minutes per day, typically in the morning before the day gets started.
TM?
I'm sorry?
Is it TM?
TM?
Transcendental, transcendental meditation. Okay, it's your own form of meditation. That's a great.
No, I'm actually using this app called Headspace. Have you ever heard of it?
No.
It's a fantastic app. It gives you guided meditation, and it really is remarkable. I ended up finding this out from Amazon. I had the Amazon Alexa, and she was telling me about Headspace just in one of those ads one day, and so I decided to check that out, and then I found it in the App Store from Apple, and since then it's become a daily habit, and I've only been doing it for about a month, but even just from a month, it's been quite a different change in perspective, and it's brought about much self-awareness.
Namaste, my trading warrior brother. Thank you so much, Michael, for being with us today, and I wish you and your subscribers continued success. You definitely was a great presentation, and I think you definitely get it. So appreciate your time with us today, and like it or not, you're my trading warrior brother. And let's get back together another time. Thanks for sharing your methodology and your journey and some of the tools you use. The meditation is a pearl. So thank you for your time, Michael. Appreciate it.
Thank you. It was a real pleasure, Dale. Look forward to talking to you and your audience again. Thanks so much for having me.
Glad our paths cross, everyone. That's Michael Lamothe. And we'll see everyone for the NFP tomorrow and wrap up the week, TGIF. Remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow prior to the NFP. Good hunting the rest of the day. See you in the chat room. See you, Michael. Thanks again.
Thank you.